kind of returns sort of trader be happy to earn in a year from an equity market?
Returns from an equity market. Well, if we look where we are at the moment, it's a question of sort of where do you think inflation is, and what, you know, what can you get for your money elsewhere? If you've got cash in a bank account or something, or a savings account, I mean, I don't know of anywhere you can get, what, 2% even? I'm not aware of it. Maybe you can somewhere, I don't know. The rate of inflation currently, well, it depends if you really believe the CPI, but where are we? We're about, I think we're sort of back down, let's say we're around the 2% level, and we have been higher, but we have come back in this country. So, okay, you're flat in terms of savings. So we're flat in that. Now, in an if you're buying equities, then there is an element of risk. So it's a question of how much do you want to be compensated for that risk. And it's sensible, therefore, to take a spread of companies, and it's sensible, therefore, to expect some kind of return over the year. So, you know, if you take into account dividends, and if you take into account actual growth, then I don't know. I'd probably want at least 5%.
I mean, how can an investor identify whether a share is attractive or not?
In terms of valuation, I suppose, there are lots of ways of looking at stocks. Lots of people have different ways of deciding whether something is an attractive valuation. I mean, PE ratios are sort of like the obvious one. And I guess the main thing that people are going to do is they're going to look at the PE and compare it to the overall sector. But, you know, the PEs, of course, change annually. Of course, there could be a very good reason why a particular stock has a high PE or a low PE, or is rated highly or lowly compared to the rest of the sector. Now, I think because of this, then the best measure, and if one can do one's homework or pay for this kind of data, in my opinion, if you're trading individual stocks, then you should be looking at the Shiller trailing PE, which is taking a back average over the last 10 years. And in that way, you're sort of ironing out a lot of those differences and stuff that happen from just looking at a particular PE at any one time and comparing that to the rest of the sector, or indeed an index itself.
What are the most important areas in company documents and financial accounts? Are there any sort of key areas or figures that you consistently would advise looking at?
Well, when it comes to, I'll be honest, I'm not the best person to ask about trading individual company stocks, because it's not something I tend to do. I prefer to deal on indices. And the reason for that is because there are people out there who really do study company reports, earnings, future earnings. You know, they're doing all that work out there, and they're analysing this data, and good for them. But I can't go up against them. And what do I mean, I suppose I could sort of pay for their advice and their information, but I'm not someone who does that work themselves.